Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. And good evening, everyone. Thank you for being here and joining us this evening. Welcome to our 17th episode of More Than Just Money series, a series for anything that is Islamic finance related. My name is Azmi, and I'll be your host for tonight. Islamic Finance at Singapore, or IFSG, is a community of scholars, financial professionals, and students in Islamic finance. So, what started out as a WhatsApp group has now become a society in the making, with a long term goal to serve the Singaporean community through Islamic finance. In today's More Than Just Money series, we will be getting to know Wahid's new fund called UMMA. And do join me in the questioning as we get to know more about this new fund from Wahid. You may ask your questions at the Slido link in the chat below. Today's evening, we are honored to have with us today the country director from Wahid to introduce and shed some light with us about the new UMMA fund. Brother Izzat Fadhli graduated with a bachelor's in engineering from University of Warwick. He went to become an equity analyst for Permodalan Nasional Berhad or PNB, which is a sovereign Malaysian fund, moving up to the fund manager of the fund covering South Korea and Taiwan. He then went on to Singapore Unit Trust Limited as a fund manager covering Asia Pacific excluding Japan before moving to Wahid to be the country director. Happy and honored to have you with us this evening, Brother Izzat. Without further ado, shall we start with the first question?
Yes, sure. Thank you. Thank you again. Thank you for inviting Wahid to this series, and honored to be here and looking forward to this session.
That's great. First and foremost, congratulations on the launch of the new UMMA fund. So for those of you who may not be aware, Wahid's latest fund is not only halal but also ESG aware. So Brother Izzat, could you walk us through what does it mean to combine both ESG and Sharia screening in a fund?
Sure. Assalamualaikum and good evening to all audience. Hopefully everyone's having a good weekend. So to address the first question, so Wahid, I think as you know, is a global Sharia robo advisory. So Sharia compliance investing is the main game, so to speak. But with the latest fund, UMMA, or its longer name, Wahid Dow Jones Islamic World ETF, we also incorporate ESG as part of the screening for the fund. So if you would like to know more about ESG, it's actually the latest development in a rapidly growing investment theme. It reflects a shift towards organizations that include long-term sustainability into their businesses, while also recognizing the risks of the consequences that could occur if a company fails to consider the ESG aspects. So I'll break down ESG later. So ESG is basically environmental, social, and also governance. So the ESG analysis was previously only viewed as a gesture of goodwill from investors, but it's now actually a critical component in a company's long-term performance. And at this moment, ESG is already included in a typical stock research or index research. So when you pair with investing, the three aspects that I mentioned earlier, the environmental, social, and governance, these are used to measure the sustainability and ethical impact of investing in a company or a business. So if I can break it down further, for environmental or E, it highlights the company's impact and consequence on the environment. So this includes the efforts for a particular company to manage such effects, and factors to consider here includes climate change, carbon emissions, resource depletion, such as deforestation. And then we have the second criteria, which is social. So this considers the company's relationship with stakeholders. And stakeholders here include employees, suppliers, clients, and to a certain extent, the communities as well. And factors here include racial diversification, representation of women, and also adherence to health and safety. And lastly, we have governance, and governance considers the internal system of the company, such as the practices, the controls, and also the procedures in applying or running of the company. And good governance can help align stakeholder interests and help ensure long-term sustainability of a company. And rather than having factors to consider, some basic principles of good governance include accountability, transparency, and fairness. So, I mean, just to sum these three factors, it will lead to a positive reputation when a company is associated with, you know, socially and ecologically responsible practices and also good governance. And this usually can help business thrive over time, and, you know, in certain cases qualify for tax incentives if a country has some fiscal policy on that, and also it can generate financially sound returns over the long term. So yeah, by integrating ESG into the screening, it tilts the fund to be more favorable to investors that are looking to invest in good company in these three areas, the E, the S, and the G.
All right, thanks for the comprehensive explanation of what each of the ESG means when someone say that these funds are ESG screens. So moving on to the next questions, we know that the UMMA funds invest in companies outside of the US, which includes countries both in developed markets and also the emerging markets. So, but looking into the fund itself, we realize that the country breakdown shows more emphasis towards developed markets. So in particular, we can see like 18 Japanese stocks that make up the highest weightage in the ETF. So is there a reason behind this? Is it because like emerging market stocks generally underperform, and they don't pass like the ESG screening, or is there any other reasons behind this?
Sure. I think the main reason is because if you look at the fund, the ETF, UMMA is actually benchmarked against the Dow Jones Islamic Market International Titans 100. And this benchmark is actually designed to measure the stock performance of the largest US companies, basically companies not from the US, that have passed their Sharia screening. So when you look globally outside of the US, where do you find this kind of big companies? You'll find mostly in Europe, you'll find mostly in Japan, and we are talking about multinational conglomerates. So you're talking about Samsung, you're talking about Tencent. From Japan, you have companies such as Calcorp and many others. So the fund focuses on investing in the largest companies, because by design the benchmark also tracks these companies.
I see, I see. Okay. So okay, moving on to the next question. Generally, like ETFs, right? They do have like they are mostly passive investments, and while UMA tracks the Dow Jones Market International Titans 100 index, but in the UMA fact sheet or UMA funds fact sheet, it states that the fund is actually actively managed. And based on like readings, it shows that actively managed funds usually entails like underperforming the market. Could you explain whether the UMA funds is passively invested, or is it simply actively tracking the underlying index fund?
So it is filed as an active fund with the SEC in the US, because again it is an active fund. When we talk about passive versus active, mostly we're talking about mutual funds or active funds, active private mandates, because then the fund managers have a greater amount of subjective input into the fund to overweight or to underweight certain sectors or certain stocks, or to tilt it to a certain direction at any time. For UMMA, again, because it's benchmarked against Dow Jones Islamic Market International Titans 100, the underlying the constituents of UMMA is basically the constituents of the benchmark. So the active part of managing the fund is mostly on the tactical allocation for the ESG screening. So basically, the index has a certain, for example, it has a certain percentage of Tencent, for example, but again, for argument's sake, Tencent probably don't have a good ESG score, theoretically. And therefore, UMMA's fund manager, which is Mr. Samim, residing in the US, and the investment team may decide to underweight the stock because of its ESG score that may be relatively lower to when compared with other companies. So it is, as I mentioned, it is an active fund, but most of it is mostly to ensure that in total, the ESG components or the ESG aspect of the fund is optimal.
I see, I see. So you mentioned about how this being an actively managed fund so that the fund manager is able to relocate or shift the weights towards those ESG friendly funds. So this is following up to the next question also. We realize that Federal Reserve trimmed its balance sheet and expectation that there will be higher interest rate this year. So is this strategy of actively managing the funds also because also would allow the fund manager to relocate the funds away from stocks and into each cash and cash equivalents? Would you say so that this is part of the strategy for an actively managed fund?
For again, when we talk about actively managed funds, UMMA is an actively managed ETF. When we talk about actively managed funds, yes, this funds, these mutual funds, these private funds, they may put greater emphasis on less risky assets, but because UMMA is an equity fund, and it tracks it tracks a certain benchmark. The idea is so that the tracking error against the benchmark is not big. So it tracks the performance of the benchmark over the long term, because that is that's the investment thesis. Why would an investor want to have exposure in UMMA is because over the long term, 5 years, 10 years, they want to have exposures in the largest 100 non-US companies in the world. If there are tactical allocations into cash, it will not be as big because by and large, it has to track the underlying constituents of the benchmark.
I see, I see. So it's okay. I think
So basically, it is an active ETF, but it is not as active as the mutual funds or the private mandates that you see from other fund managers, because again, those are meant to outperform the benchmark. For ETF, generally, the idea is for it to follow the benchmark's performance. And if an ETF, and if we deviate much of our holdings away from the ETF, then over time the performance will not correlate. And if that's the case, then basically as an ETF, it has failed its mission lah, basically.
yes, yes.
Yeah.
I see, I see. So in summary is, am I right to say that the cash is being used so that if in the event that the rebalancing or emphasizing of different stocks like move away too much from this underlying index fund, then it will use the cash to actually correlate back closer to what it is trying to imitate the underlying fund.
Yes, that can be one of the reasons why the cash would then be utilized to basically bring back the weight of any particular stock that has deviated much further away than the index.
I see. Okay. So moving on to the next question. Some of our more experienced Singaporean investors, right? They have mentioned that the daily trading volume for UMMA and also another of Wahid's ETF, which is a halal funds, is actually very small. So the volume is quite small, which might affect the spreads due to the thin liquidity in these funds. Well, could you explain what does this means to newer investors and then share your views on this issue?
Sure. I think when people talk about the liquidity, they talk about what they see on their brokerage app. So when they put an order to buy or sell, they see the bid and ask how many investors are there bidding, how many investors are there asking for the fund, and at any time they may see a low number, like basically, and that usually if people see that, they will conclude that the liquidity is not there lah. But But with ETF, and this is true for most ETF, there are actually market makers behind the scene, and what these market makers do is they actually hold inventory. So if there are demand for it, they will put their inventory into into the secondary market so that people can buy. And even if there are people wanting to sell it, they most of the time they will be the first to absorb it as well. So they act as a buffer between the ETF manager, which is Wahid, as well as the secondary market investors. Having said that, how they can do this is because their part as a market maker is basically on the back end is to create the units. So what it means by creating the units is, let's say a huge order comes in to buy new units of UMMA, and the existing units is basically already taken up by other investors. What the market makers will do is they will use the cash from the buy, and they will purchase the individual funds. The individual stocks that make up the fund. And when they have the number of stocks required, they will then basket it to become a unit of UMMA. So that's how they do it. And it's the same when there's a huge sale. If there is a huge sale, what they will do is they will break up the units of UMMA into the separate individual stocks, and they will sell it at across the markets, and the cash proceeds will then be used to settle the transaction lah. So with ETF, there are actually 3 layers of liquidity. One is the first one that I mentioned earlier, is the on-screen liquidity that you see on your brokerage app. And then the second one is actually the liquidity provided by the market maker through the inventory that they hold. And the third is actually the primary market, which is the creation and redemption process, whereby they actually acquire the stocks, the underlying stocks, and they create the units, or they break up the units to sell the stocks. So and again, I have to emphasize this, that this is true with most ETFs. And to address the spread or the premium against the NAV, generally for a start, in the first few months or so, the spread will be a bit big, because this creation and redemption in the primary market is happening. But over time, it will be less. And for example, our currently our halal HLAL spread is about the premium that is trading is about 8 or 9 basis points, and this was much lower than when it first started trading. And again, if the idea is if you want to invest in ETFs, mostly because it's passive investing. In this case, it's active, but it's also in a way tracking a benchmark. The idea is for it to be a long-term play. And it's true for halal, and it's also true for UMMA, because again, this the returns that you're looking for maybe, you know, in the next 5 years or 10 years, then it can give you that overall annualized returns that they have been giving over the last years of the back testing period. So from the back of my head, for example, and this, you can check this on Dow Jones website, the Dow Jones International Titans 100. I think for the last 10 years, I think if I can just check it very quickly, for Dow Jones Islamic Market International Titans 100, if you go back 10 years, its return is about 8% annualized. Much bigger over 5 years and 3 years because of the easy monetary policy worldwide. So over 5 years, annualized is about 12.87%. Over 3 years is about 14%. But again, you look at it at a longer term, over 10 years, 8% is still an attractive return.
All right. Thanks for the answer. Just now you mentioned about the 3 layers of the ETF. Do you have like the data of how often would the trades be matched, or on screen, on the money market level, and also the creation level?
I don't have the data, but generally, when you look at the fund size of UMMA, and I think this is something that you can check in Bloomberg or in any of the financial website. If there are big orders coming in, meaning if suddenly the volume of on that day spikes 1 or 2 million, and again you can check this on any website, then it means that creation has to be done on the back end. So the market maker then has to they have to create new units for the new investors to acquire units of UMMA. And let's say if there are market downturns and there are huge sales and the AUM drops on the back end, you would see. I mean, on our side we would see, but usually the market makers will do their job on that end as well. So I don't have the data on that. But by and large, if it's just retail orders coming in, it's usually taking the either the inventory from the market maker or from the sale of other retail investors.
Okay. Okay, moving on to the next question. You mentioned about how purchasing UMA funds in the app, right? So will UMA fund be made available to existing investor or of the Wahid app? Because and also, are we as Singaporeans allowed to invest in the Wahid app?
Um, so I'll tackle the first question first.
Okay.
So yes, I think if I'm not mistaken, currently all of the portfolio of the international app of people that is onboarded in the international app, I think they are currently being rebalanced to have exposure in Oman. And I think the idea is to replace the existing iShares with both UMA and also Halal, because again with Halal and UMA you basically have US exposure and also ex-US exposure. So on the global equity side, you are basically covered most regions. For Singaporeans in particular, again, please correct me if I'm wrong. You can be onboarded to the global app, and if you do so, then yes, in the future or in the near future or even currently, if you're onboarded, you will be exposed to both HLAL and also UMA.
All right. Okay, that's good to know. Then we can buy both the UMA and HLAL's funds through the International Wahid app.
Okay, so the international app, the way you get exposure is by investing in the diversified portfolio. So you don't buy directly
Oh,
the
okay.
UMA and Halal fund. It will be a portion of the equity side of the portfolio. So if you are, for example, if you are in a moderate portfolio, you will have a small percentage of halal, a small percentage of UMA, and then you have exposure in sukuk, a bigger exposure in sukuk and others. And then if you go to the very aggressive, then you have a bigger allocation in both halal and UMA and a smaller percentage in other asset class. Uh, as of now, I don't think you can get a direct, like if you want a direct UMA or a direct halal, it is you cannot get it through the Wahid app.
Ah, I see, I see. So it's
Mm.
like through the automated allocation, you will get the exposure
That's
of
right.
this halal and UMA.
Yeah.
Okay. Okay, so moving on to the next question. So besides the UMA fund, there's another globally diversified ETF, which we know as iShares MSCI World Islamic ETF, which is also available in the Wahid's international app. And it was incepted this fund is incepted way back in 2007. So as a product or a country director of Wahid's, what's the proposition for an investor to actually go for the UMA fund besides the fund that I have mentioned earlier on?
Um. And I assume this is if you are using your own brokerage account, right?
Yes, so
To
because
yeah.
you are able to choose between the UMA
Yes.
and this job.
So the value here is that, like I mentioned before, if with both halal and UMA, we basically have one fund covering the US stocks and the other fund covering the ex-US stocks. If you are to use iShares, you can have it by holding iShares World. but then it is both US and non-US are in there lah, so you cannot you're not agile lah. Basically, if you want to have a certain short-term positions, you have to either go in or go out from there. So that's one. The other one is, of course, UMMA is a bit different because of its ESG consideration. That's another one. And yeah, I think most of the argument relies in either you want to have one exposure combining both US and the rest, or if you want to have the flexibility of holding a US exposure and a non-US exposure, and basically being tactical enough on your end to decide when to have exposure or when to overweight, when to underweight certain funds.
Yes, yes. I think the agility and the flexibility of being able to switch or putting more emphasis on either the US or the outside of US funds that you're able to do with this halal and UMA fund, right? I think will entice investors to opting for these types of investment rather than just putting in a one fund, which is the World Islamic ETF. So we are down to the next or to the last questions. So before we proceed on to the Q&A, for those of you, the audience here, who have your questions, who like to ask Brother Izzat over here, you can put in your questions at the link down in the Slido link below. So the last questions for these curated questions is the future of Wahid. So what's next for Wahid? Are you guys planning to create more index funds targeting different thematic, or what's there?
Yeah, I think the idea is that there is a pipeline, and there, of course, we want to basically solve clients' needs in the Sharia compliance space lah, because as you know, when compared to conventional, we do not have enough products that can cater, or the products are not basically readily available to retail investors. So yeah, there are products coming in, inshallah. Not much that I can divulge here, but hopefully we can target other asset classes as well, and especially those that are currently a bit hard for Muslims to invest in. And I think once these products come out, I'm sure that it's going to be offered through the app as well, and not just asset class, but like you said, we're also trying to meet investors' needs in terms of thematics as well, and these are done either by the Wahid group releasing a product, or by any, because if you know, we have certain localized app as well. We have the UK app, the US app, Malaysia app as well. And these countries are already offering certain thematics to their clients. Yeah, and that is something that we want to sort of try and provide, and as and when those need arises, like in certain markets. So again, inshallah, if there is a Singapore app in the future, then I'm sure that will be the needs of the Singaporeans will also be tried to be met as well.
Yes, yes. I'm
again,
so waiting.
no promises.
Yeah, I think I'm still waiting for the Singapore Wahid app. And honestly, I was secretly hoping that you would divulge some of the secrets of Wahid. But oh yeah, I think it's good. Okay, and, I think it's good that we move on to the next segment of this call, which is the Q&A session. If I'm allowed to share my screen, let me try and see how this would work. So, Brother Izzat, can you see my screen?
Yes.
Okay, so there will be some sets of questions over here. We can go in order, or if you like, you can choose the questions that you think is best to be answered. So if there's no, I will give you like about 10 seconds to choose. If not, then I will just go with the order that is on the screen.
I think you can just go in the order. It should be
Okay,
fine.
then that's good. So the first question is, what is the fee and pricing of Wahid UMMA Fund?
So the fee, okay, so the UMMA fund has an expense management fee or expense ratio, which is about 65 basis points or 0.65%, but that is over the year, and that is most of the time or not, it is actually deducted on a daily basis from the NAV of the fund. So in terms of how much you pay as a retail, it depends on the brokerage that you use lah. Basically, I'm not sure what sort of brokerage Singaporeans use, but it depends on your own brokerage in terms of when you purchase it, how much are you paying your commissions lah to your broker. So I think currently UMMA is trading about $23 US dollars, 23 to 24 US dollars. So that's where it is at the moment. Like if you want to acquire 1 unit of UMMA.
Okay, so so in summary, it's 0.65% or 65 basis point for the fee, which
Yes,
is deducted daily.
daily from the NAV. Yes. Yeah.
Okay, so second question, let me just take this first. Second question is, should I be concerned of the 30% dividend withholding tax affecting my returns as a non-US person?
Okay, this is actually a good question because this is something that non-US investors are looking when trying to invest in US. Yes, it is a US fund, but if you're talking about the dividend, so this 30% is only on your dividends. So let's say, and I think because the fund has not declared any dividend yet, but let me just proxy the HLAL fund lah. So HLAL dividend is about 0.8%, 0.9%, or let's make it simple, 1%. So instead of getting the whole 1%, you actually get 0.7% because 30% goes to the US government. But we are only talking about dividends.
Yeah.
So when you invest long term, especially in the US or any other mandates, you're talking about capital appreciation basically, and capital appreciation over the longer term. As I mentioned before, if historically by backtesting, UMMA 10 years is about 8% annually, and 8% is the total return. So this already includes dividends. And if you deduct the 30% on dividend, it will only, your returns instead of 8% will probably be like 7.9 or 7.8%, which is still a good annualized return. So again, if you're thinking it over the long term, dividend withholding tax shouldn't be the one that make or break your decision.
I see, I see. So the number looks quite big, 30%, but
Yeah, but it's
because I
only
think
on
we
your
are,
dividends. Yeah,
yeah,
only on your dividends. So this is something that you have to understand because you have to separate dividend and also capital appreciation basically.
yeah. So I think we can look at like 30% of 1%, which is a dividend.
Yes, that's right.
Okay, so you're done with that question. Let's move on to the next one. So what are your analysis on this basket of stocks, which I assume the holdings of the UMMA fund, and if one should invest in it?
I mean, if you this is a tough question because we are not research. I mean, we are robo advisors that invest in funds, but generally, just by looking at the index, which is the Dow Jones Islamic International Titans, these are the best non-US 100 stocks in the world. And generally, they have a good business model. They have good prospects. They have a good market share in their fields. And as anyone would tell you, please do your own research. But if you want to invest in one of these stocks, but at the end of the day, these are the largest stocks in the world. These are the blue chips lah, and it's not hard to get any information on any of the stocks that are in the basket of the fund.
Yes, yes, yes.
Mm.
So this is also because the funds consist of the biggest or like the most successful stocks outside of the US. So it's safely to say on top, okay, warning disclaimer, do your own research. It's safely to say that these are the quite safe stock to invest in compared to the other
Nothing is safe
small.
in at this moment. Nothing is safe.
Okay,
Whenever you invest, your capital is always at risk, and that is something that we always say to our clients lah. And the reason, again, I don't know if people know about the story whereby our founder, the reason why he founded the company is because he went into a cab in the US, and the cab driver, who's a Muslim, say that he only invests in one stock, which is Apple. So when you invest in only one stock, what you have there is concentration risk lah. And when let's say, and this person actually invested most of the, if I'm not mistaken, most of the life savings lah, or most of the money that he can he can invest, and that is generally that's a dangerous strategy lah. And which is why Wahid is here basically to say that diversification matters. Investing over the long term matters, and also having exposure in many asset classes and not just equities also matters, because over the long run, these are the money that would carry you through your retirement years and would be funding your child's educations and so on. Yeah.
Okay, so summary, do your own research. Not every investment is safe. Okay, so okay, next question. What is the screening criteria for this fund, this
Sure.
UMMA fund?
So two screening. So first one is Sharia screening using the index, which is again, as mentioned many times, the Dow Jones International Titans 100. So that's the first screening, and then the second is actually our ESG screening. So for ESG, and if you go through the prospectus in our website, which is umma.wahidinvest.com, we use a Switzerland-based company called RepRisk. So this is a long-established company that basically the expertise of the company is data science in ESG. So they use research, they use AI, machine learning, human intelligence to basically filter through all the daily news to ensure that all of the ESG news, related news of I think more than 100, more than thousands of companies are collected and also used to analyze this companies lah. So at the end of the screening, it will basically say, oh, this E aspect of this company is probably deteriorating because there are bad news coming in. Probably the company is not taking care of the environment as properly as they can, or maybe in terms of the governance, there's fraud involved, so the governance aspect is situating, so on. And again, it's a data science company, and we use this screening to ensure that in terms of allocation of the underlying constituents of the benchmark, we take certain overweight or underweight calls so that we overweight companies that are better in their ESG component, and we underweight companies that are not doing as well in their ESG. So over the long run, again, the idea is over the long run, company with good sustainability on the ESG front would see better results lah, because again, they are taking care of the environment, they are having a better social relationship with the stakeholders, and in terms of governance, they are responsible and they have good accountability lah. So these are basically reputation risk lah. So if you have less reputation risk, most of the time your company will do better over the long run. Yeah.
Okay. So okay, so we are done with that question. Okay, we should move on to the next question, which is how does this complement a portfolio? Which I think you have mentioned on the briefly, but maybe you can
But I think I can expand
Yeah.
it a bit. So I mentioned we have two funds, US and non-US, halal and UMMA, and then if you are somebody who can create your own portfolio, you can use these two funds for your equity component, and then you can have your safer investments such as your sukuk or your money market, and you can basically assess on your own. If you are younger, maybe you take a bigger portion of the equity, a smaller portion of the safer instruments. Or if you are later on in your years, you want to be safer, you take less risk and invest less in equities and have more in your fixed income or sukuk or your money market instruments. So that's how you can, if you want to do on your own, that's how you can basically manage your portfolio.
Okay, so in summary, is what we have been talking about, which is rebalancing on how you want to put more emphasis on in the US market or in outside the US market. So I believe that is the end of the question and answer session. So for those participants that want to ask more questions on brokerage or investments, you can stay back for post session after this. For the rest of you, we have concluded this Q&A session and the MTJM series. So I hope to see you guys again. And for the rest of you, do stay back if you like to ask some questions on brokerage and investments. With that, assalamualaikum to the people who are leaving this call. I hope to see you guys next time. And do stay tuned in IFSG, Instagram, Facebook, or LinkedIn to know more about our events in the future. Thank you.